क्लास में रहना था ये रहना। स्टार्ट किया। हम्म? चल, can we start once again everyone? चलो, before break we were discussing about Ind AS. So what we have discussed that Ind AS are converse form of IFRS issued by central government in consultation with ASB, ICI and NAFRA etc. Alright, and also we have understood that for the ease of reference the number and the title has been retained. Already we discussed that IAS now become IAS 1 to IAS 40 become Ind AS 1 to Ind AS 40 and IFRS 1 to IFRS 16 become Ind AS 1001 to 116. That you have understood. Already I have said that there are only 5% difference. Correct. What are the difference between Ind AS and IFRS that we need to understand? Of course, we are not going to discuss any differences, but for your understanding, there are three type of differences. There are three types of differences between Ind AS and IFRS. First difference you can see is the difference between the terminology. Terminology. I mean, it is quite possible that some different terms was used in IFRS and some different terms has been used in Ind AS. Basically, there are two major changes in terminology. Internationally, balance sheet is known as statement of financial position. And SOPL means statement of profit and loss is known as statement of comprehensive income. Statement of comprehensive income. I think statement of financial position you have understood. Here the balance sheet is actually a statement of financial position. Financial position is position of assets and liability. Better terminology is statement of financial position only. I don't know why in India we call balance sheet. What is balance sheet? Balance sheet means what? A paper of all the balances. It is actually trial balance. Means from trial balance we prepare balance sheet and therefore it is known as balance sheet in India. So traditionally we used to call that what? Balance sheet. But now we are modern now. We should give a correct term. The correct term is statement of financial position. And statement of profit and loss, internationally it is known as statement of comprehensive income. What is comprehensive income? Right now I will not discuss. But I hope you have understood these are two different changes in terminology. Now one question arises when we adopted IFRS, so why we have not changed the term? We should use the better term. But to use that term, we need to first change Companies Act. Companies Act says that financial statement include balance sheet and statement of profit and loss. Who will change Companies Act? In India, amendment under Act is it will take time. It will take time. So what MCA has done that retain the same terminology what has been used where in Companies Act. And because of that reason there is some differences between Ind AS and IFRS. But actually this is not a difference. Can you say difference in terminology will not give any impact in financial statement? We can say this is one of the difference. So two major changes in term. Now in India we call it what? Just write down because these terms may be used. So as per Ind AS and as per IFRS, balance sheet internationally we call it was statement of financial position. Means whenever in exam they ask you to prepare statement of financial position, just understand this question has been taken from international book. Understood? So whenever they say prepare statement of financial position, you prepare balance sheet only, but that means that question has been taken from international book or international exam. Correct now? And India, SOPL, we call it statement of profit and loss. Now we call it for statement of comprehensive income. So in later class, you will automatically understand what is the meaning of comprehensive income. I don't want to discuss right now what is actually comprehensive income means. Correct? But the format is more or less same. Balance sheet format, statement of PL format is more or less same. Correct? Only the terminology changes. Hai. Correct? Second difference is related to removal of option. Removal of option. Now IFRS is not so much rigid. Means IFRS has given many options for accounting treatment. Are you getting what I am saying? Suppose they have not given option, so can I say it become rigid? We need to apply that accounting treatment only. Now, if you want to make one standard which is globally accepted, so we should be thoda sa flexible. And because of that reason, IFRS has given many options, or I will say they have given two options for one accounting treatment. Either you use this or use this as per your requirement. For example, I'm just giving one example. The IAS 40, International Accounting Standard 40, has given two options for valuation of investment property. IAS 40 is for investment property. Coming soon in your life, they have given either use cost model or fair value model. Cost model or fair value model. Now, what is cost model? What is fair value model? We'll discuss. But they have given two options now. Means either you use cost model or use fair value model. Fair value model means you can value at current fair value. Cost model means historical cost. This option is given where? In IAS 40. Such option might have been withdrawn under Ind AS. Are you getting? Now, Ind AS 40 says only cost model. Are you getting? So that is removal of option. So there are many options which has been given under IFRS which has been removed under Ind AS to make what Ind AS think that we should give only one option so that the financial statement are comparable in India. Are you getting? So for making the financial statement comparable India wise, they have removed many options. Once again, can I say removal option will not make any difference? They have given option and that option has been removed in India. That does not mean financial statement will vary. Are you getting what I am saying? So second difference arises because of removal of options. First difference is because of different terminology. Second difference is what? Due to removal of options. Understood? So can I say these two actually are not difference. Major difference will arise because of what? Third point. That is carve in and carve out. Carve in and carve out. There are two major type of difference. Carve out means what? A different accounting treatment has been considered in India. Means whatever has been given internationally, that has been removed and different accounting treatment has been given, that is known as carve out. And that difference in accounting treatment arises because of economic condition prevailing in India, which might be different than other countries, other developed countries. Of course, can I say economic condition of London will be different from what? India. UK and India, the economic conditions are different. So whatever they are using, we might not use. So that difference in accounting treatment is known as what? Carve out. Carve out. Carve in means what? It is quite possible that there was no accounting treatment given under IFRS. Means for a specific transaction there was no accounting treatment and that accounting treatment is given where? In India. So that is included carving. It is quite possible for a particular transaction IFRS was silent but India has given accounting treatment that is known as what? Carving. There is only one carving and balance are carve out. I will say in total there are 11-12 points. If you do that 12 point, can I say you understand IFRS also? If I do that carve in and carve out, in respective Indians, so automatically you will understand what? IFRS. So that carving carve out we'll discuss. Because can I say very small differences? Very small differences. So this carve out and carve in will make a difference between IFRS and Ind AS. Got it? So what is the meaning? Certain changes have been made considering the economic environment of the country, which is different as compared to the economic environment of developed countries, which has been considered while making IFRS. These differences are due to differences in application of accounting principle and practice and economic condition prevailing in India. The difference which are in deviation to the accounting principle and practice stated in IFRS are commonly known as carve out. That only I have said. Further, if there is no guidance under IFRS for a particular transaction event, there is no guidance, there is no accounting treatment given under IFRS or IAS, then the guidance provided under Ind AS is known as what? Carve-ins. Correct? Why I am just informing about these terms, carve-in and carve-out? Because as a CA, anyone can ask, do you know about carve-in and carve-out? You say, what is this? So that is not what? Correct. You should know everything, even though that is not a part of our syllabus. We will discuss this. However, if you know about elective paper, paper 6 is an elective paper, and there is one subject known as GFRS, Global Financial Reporting Standard. In Global Financial Reporting Standard, we have IFRS and US GAAP. Understood? IFRS and US GAAP. Can I see if you know this? You know IFRS? Means can I see if you completed FR and if you have done carve out and carving, so you have understood IFRS. And GFRS 90% syllabus is what? IFRS. 10% is US GAAP. So 90% of is completed with FR classes only. Correct? So you can elect that subject, you can do self-study for that, and believe me, after FR classes you can do self-study for that. You don't require any classes. However, I will not say don't take my classes for that, but you don't require. You don't require. If you have understood FR conceptually, are you getting what I am saying? So that also you can elect, and this carve in and carve out with all other discussion will be used in that particular subject. So I am doing carve in and carve out with a state of mind that it might happen you have opted for GFRS, in that will help. And of course, if you have not opted in interview, it will help. Interview, if it is they have not asked, in your practical life it will help. Got it? Yes, sir. Coming to the roadmap. Roadmap for implementation of Indian accounting standard. So when this rules was framed, 2015 rules, so they have given the roadmap for which companies Ind AS will be applicable at which point of time. The first roadmap was given for those companies which are not banking company, insurance company and NBFC. First roadmap was given for those companies which are not banking company, insurance company and NBFC. NBFC means non-banking financial company. Okay, so for banking company we have one act, Banking Regulation Act. Once again, changes required where? In Banking Regulation Act, na? Are you able to understand? Some time is given. Well, banking company right now we can't implement what India is. Insurance company is regulated by IRDA. For NBFC, actually there is no specific act, but RBI guidelines will be required for NBFC. So if you want to make some changes there, you need to make some changes where in the specific act, and therefore the roadmap for these were different. Phase 1 was voluntary. Phase 1 was voluntary. And phase 1 was applicable from 1st April 2015. I said mandatory, it was applicable from 1st April 2016. But on a voluntary basis, any company can adopt what? Ind AS from which date? 1st April 2015. Can you say it become past tense? Means whatever we are discussing, this is past, and from this, of course, they will not ask now question. So then why we are discussing? Of course, we should know for which companies Ind AS is applicable. But from my point of view, this is not important from exam point of view. Whatever we are discussing. Got it? So first phase from 1st April 2014 or thereafter, voluntary basis for all companies. Any company of whatever nature can adopt what? Ind AS. It means a small company can also adopt voluntary Ind AS. But once adopted, they cannot switch to what? Accounting standard. Means once adopted, they will need to adopt Ind AS for the entire life. Got it? Then mandatory basis started from 1st April 2016 on a mandatory basis. So mandatory it was applicable for which company? So you can see point number A, point number B, point number C. So it was applicable to those companies listed. All the companies which are listed or in the process of listing, either in Indian stock exchange or any foreign stock exchange. So listed either in India or outside India. In the process of listing either India or outside India. Correct? So any companies which are listed or in the process listing having a net worth of 500 crore or more. Correct? It was also applicable to all unlisted companies also having a net worth of 500 crore or more. Means can I say in this way A plus B, any company having a net worth of 500 crore or more? Means I can combine these 2 points. Na? Any company whether listed or not listed having a net worth of what? 500 crore or more. This was from 1/4/2016. Correct? Point number C, any company which is parent company or subsidiary company or associate company or joint venture of above means A and B, to them also Ind AS will be applicable even though net worth is less than 500 crore. Now you know parent company. What is parent company? Because you have done consolidation in CA Inter. Don't say that you have skipped that topic. But even though you have skipped, you know parent company. In Companies Act also you have done parent company and subsidiary company. Do you know about associate and joint venture? Do you know about associate and joint venture? Really you do? You know. Where you have done associate and joint venture? Means practically you know or you have done in any subject? Means where you have done that I am asking. Law may associate they define. Very good, yeah. Excellent. So I will assume that right now you know associate and joint venture, but I will only discuss when the time will come. Right now I will assume that you know associate and joint venture. Correct? Because right now I am not discussing anything about parent, subsidiary, associate and joint venture. Correct? But I hope this point you have understood. So to any company, Ind AS is applicable to their parents, subsidiaries, associate, joint venture. Also, Ind AS will be applicable. Now the question is the net worth of which date? Means we should calculate net worth on which date for which financial year for the applicability. So what they have given, net worth shall be checked for the previous 3 financial year. Previous 3 financial year. So if it is 1/4/2016, previous 3 financial years will start from which year? Can I say from financial year 13-14, 14-15 and 15-16? And in any one year, if the net worth is equal to or more than what 500 crore, Ind AS will be applicable. In any one year, in any one of the 3 previous years. So in any one, have you understood this point? In any one previous 3 financial year, if net worth reach the specified limit, then Ind AS will be applicable. Ind AS will be applicable from which date? From 1/4/2016 on a mandatory basis. I think first phase you understood. As second phase you understood. Correct. Now coming to third phase. Once again third phase on mandatory basis. So third phase, some more companies will be included. Some more companies will be included, but for them Ind AS will be applicable from which date? From 1st April 2017. 1st April 2017. You can learn in this way. It was started when this rules was 2015. That too you can retain 2015. So voluntary basis 1/4/2015. Then 1/4/2016. Then 1/4/2017. So what will come under this phase? So can you say all companies which are listed or in the process of listing, whether in India or outside India, Ind AS will be applicable. Even though net worth is zero, even though net worth is negative, even though net worth is negative, means all listed company or the companies which are in the process of listing will be now in the purview of what? Ind AS. any listed company Ind AS will be applicable. Correct? You can see all companies whether which are listed or in the process listing now not covered in phase 1. Of course, not covered in phase 1. Better it should be phase 2. Not covered in phase 2. Correct? Ind AS will be applicable from phase 3. Correct? But for unlisted company, all unlisted company Ind AS are not applicable. So in phase 3, those unlisted companies having a net worth of 250 crore or more. Of course, less than 500 crore. Because more than 500 crore or equal to 500 crore was covered where in phase 2. Means any unlisted company having a net worth of 250 crore or what? More than 250 crore. Now, Ind AS will be applicable from 1/4/2017. Correct? Understood? AB you have understood? Once AB will come, so C point number C will what? Parent, subsidiaries, associate, joint venture of A and B in AS will be applicable from that date only. Understood? Here you can see net worth shall be checked for the previous 4 year. Previous 4 year because 13, 14 will be included. So you can see 13, 14 is common. Then 14, 15, 15, 16 and 16, 17 also will be included. So in this 4 year, any 1 year net worth is as per the specified limit, Ind AS will be applicable. But these are not important because it become past tense now. So they will not ask this type of question in exam. Got it? Understood? So you can see we have now understood for those companies which are not banking companies, insurance company and NBFC. Means we have understood that for banking companies, insurance company and NBFC some different roadmap was given. For different roadmap was given. So let us now discuss about for scheduled commercial bank, insurance company and non-banking financial company. Scheduled commercial bank. So when I say scheduled commercial bank, so of course it will be excluding what? RRB. RRB means what? Regional rural bank. So for regional rural bank, this roadmap is not applicable. What is scheduled commercial bank? You have done banking companies where NCA enter, you know better than me. What is scheduled commercial bank? What is scheduled bank? Very good. Which are listed in the schedule of what? RBI. That becomes scheduled bank. That becomes scheduled bank. We are not discussing about scheduled bank. If you want to know what is scheduled bank, go to Google Baba. Go to Google Baba. Correct. Now for scheduled commercial bank, actually it was effective from 1st April 2000. It was effective from 1st April 2019. Initially it was 18, then deferred by 1 year, 1/4/2019. Now deferred till further notification. Means right now Ind AS is not applicable for banking companies. It is not applicable for banking companies. So however, later on RBI deferred the Ind AS implementation till further notice through a notification dated 22 March 2019. Why? Because Banking Regulation Act says that we are till now not prepared to change the act. We need to change the act now. For the entire act need to be changed. It will take a lot of time. In India, so of course it will take a lot of time. You know, the Companies Act 2013, which is now you are studying, it was first drafted in which year? You know about this fact? It was drafted in first which year? 2006, 1987. 1987 it was initially drafted. Because before 2050, before 2013 Companies Act, we were using which act? Companies Act 1956. 1956, that time to India was a totally closed economy. That time that Companies Act came. Means it has taken so many years to change that particular act. India, it is not easy to change the act. And whenever we try to change, other party will not let the government to change the act. This is the fact. Are you getting what? You know about all VAT, you know about GST, so many panga. Correct now. Are you able to? However, I will say in Pakistan, act changed quickly than India. So we will not discuss about that. Out of the topic, we will not go to the politics. Correct. But I hope whatever I want to say you have understood. So we need to change Banking Regulation Act. Therefore, they said no, we require more time for implementation of India. Similarly, for insurance company, it has been deferred till further notice. Insurance company was also initially it was applicable from 1/4/2019. Then RDSA, IRDSA, then no, we are not till now prepared to implement India's. We require some time. So you can see it was also deferred till further notice. Got it? Now suppose it is now applicable to I will inform you after some with some videos. Correct now? Right now it is not applicable. Got it? Now for non-banking financial companies, for non-banking financial companies, no. RBI is RRB is also India's is not applicable. Correct? Understood? They have excluded only RRBs. They have excluded. Understood? Correct? Means for this entire para is for what? Scheduled commercial bank. It is not for RRBs. It is not for RRBs. Now for non-banking financial company, because there was no specific act. Because there was no specific act. Correct now? Therefore it can be applicable. It can be applicable. So for that it become applicable, and first phase came from what? 1st April 2018. 1st April 2018. So after 1/4/2017, which year will come? 1st April 2018. You can see the road may be same only. NBFC, whether listed or unlisted, having a net worth of what? 500 crore or more. Same point. NBFC, whether listed or unlisted, having a net worth of 500 crore or more, for them Ind AS will be applicable for those NBFC from 1/4/2018. And of course their parent company, their subsidiary, their associate, their joint venture also Ind AS will be applicable. Understood? To check net worth once again, three previous years start from what? 15, 16, 16, 17 and 17, 18. They are not important, huh? This is not important, but then also you should know, because this all become past tense. This all become past tense. Got it? Second phase, whatever the NBFC which was not covered under phase 1 will be covered in phase 2 from 1st April 2019. From 1st April 2019. You can see NBFC which are listed or in the process listing on any stock exchange, whether in India or outside India. Correct now? For them, Ind AS will be applicable from 1st April 2019, which was not covered under phase 1. Which was not covered under phase 1. Correct? And NBFC that are unlisted, having a net worth of what? 250 crore or having a net worth of 250 crore or more, which was not covered under phase 1. Of course, but less than 500 crore. Got it? Once again, point number C will be what? Parent company, subsidiary company, associate, joint venture of the above A and B. For them also Ind AS will be applicable from 1st April 2019. Correct? Net worth once again will be checked for previous 4 years, starting from 15, 16, 16, 17, 17, 18 and 18, 19. Correct? Now points to understand. Correct. Now one doubt will come, sir, whether Ind AS will be applicable to consolidated financial statement or standalone financial statement. Standalone financial statement. Standalone financial statement under Ind AS is also known as individual financial statement. Individual financial statement. Now one doubt will come, sir, Ind AS is applicable to consolidated financial statement we prepare for group companies, and individual financial statement normally we prepare for those entities which do not have subsidiaries, associate and joint venture. So it will be applicable, of course it will be applicable for both. It will be applicable for both. So Ind AS is applicable for both consolidated and individual financial statement. So what is the meaning of net worth? Because we are using net worth, so we should define net worth. Because we are following Companies Act, so can the net worth should be taken as per the meaning given under Companies Act. So as per Companies Act 2013, net worth means what? Net worth means paid up share capital. Paid up share capital. When I say paid up share capital, it will include equity share capital or both equity share capital and preference share capital. Both equity share capital and preference share capital. Equity share capital plus preference share capital. Understood? In this, we'll add all the reserve and surplus created out of profit. Normally, can I say reserve and surplus are created out of profit? When I say reserve and surplus, so reserve and surplus are created out of profit only, na? Can you give me some examples which are not created out of profit? Can you give me some examples which are not created out of profit? Securities premium. Can I say best example is securities premium? It is not created out of profit, it is created out of contribution from shareholders, and therefore it is added separately. Check karo. Add what? Securities premium account. So securities premium will be also added, but that is not a reserve created out of profit. Understood? So securities premium is nothing but I will say part of capital only. Part of capital. So you have understood paid up share capital plus securities premium plus reserve created out of profit. Can you give me some other examples of reserve and surplus which you have done in CA Inter which is not created out of profit? Hmm? Revaluation reserve. You have done under AS 10, accounting standard 10, revaluation reserve that is not created out of profit. So that is not considered. That will not be added. One more. In amalgamation chapter you have done capital reserve. Amalgamation chapter difference will be goodwill or capital reserve. That capital reserve is also not created out of profit. You can see, but does not include reserve created out of revaluation of asset and amalgamation. Understood? So that will not be added. To will not add revaluation reserve, will not add capital reserve. Apart from that, all the reserve and surplus will be added. Now one doubt will come, so we create many statutory reserve for some specific purpose. For example, debenture redemption reserve. So debenture redemption reserve, will you add DRR? Yes or no? This is no. This is yes. So what you are saying? Huh? So DRR is created out of profit or without profit? DRR is created out of profit or some from some way, other account? All reserves are created out of profit only. And can I say if it is not used, it is profit only. That will be added. All the reserve and surplus apart from what? Revaluation surplus and capital reserve created in amalgamation you need to add. So it is not written don't add na. So add na. Will act whatever we read as per given. It is not written don't add na. It is given. Add. Don't apply for whenever you read any act now we don't apply our common sense. For act we don't apply common sense. Income tax act you have done. Income tax act you have done. Our tax rate is 35%. Why? Why? Tax rate maybe 20%. Why? There is no reason na. We need to whatever is given that we need to apply. The income tax act you can't apply common sense there. Can we apply common sense? No, we can't apply common sense. When we'll do Ind AS, we need to apply entire common sense because Ind AS is totally based on what common sense. So there I will say apply what common sense. For act we don't apply common sense. Act to whatever is given that you do. So all the reserve and surplus which are created out of profit will be added, and DRR is also created out of profit only. Correct. Less of course accumulated losses. There can be some negative profit also, means loss, negative reserve and surplus that you deduct, less accumulated losses, less deferred expenditure and miscellaneous expenditure not yet written off. Now actually nowadays we don't find deferred expenditure and miscellaneous expenditure not yet written off. Means normally this heading will not come in the balance sheet because as per AS as well as Ind AS there is no deferred revenue expenditure. Do you know what is deferred revenue expenditure? Have you done somewhere deferred revenue expenditure? Huh? Deferred revenue expenditure? You don't know? Acha, miscellaneous expenditure? Do you know any example? Huh? Preliminary expenses. Preliminary expenses. Correct now. Or any more example? अरे वही तो है यार. Incorporation expenses and preliminary expenses are same only na re. One more example. I don't know whether you have done that or not, but many teachers teach in CA foundation use advertisement expenditure. ऐसा किया? So that can be deferred. That can be deferred. Yes or no? You have done in CA foundation? The CA foundation, we don't remember what we have done. CA and you asking about CA foundation. So you are joking or what you are doing? We passed and we have forgotten everything. Chalo. You remember about preliminary expenses. So can we defer that? Can we defer that? As per AS 26, not Ind AS. Huh? Right now I am not teaching Ind AS. As per AS 26, such expenditures should be charged to PL as and when incurred. As and when incurred. Can we defer that? We cannot defer that as per AS 26. So now there is no concept of deferred expenditure. So this point is only as per Companies Act. Companies Act is written, but actually this point will not be applicable only. But if there is some any expenditure which has been deferred, that is just like an accumulated loss. Any expenditure which has been deferred, that is just like an accumulated loss or not. So if you are deducting accumulated loss, also deduct what? Deferred expenditure which is not yet charged to profit and loss. Understood? Correct. So this become net worth. In exam they may ask you to calculate net worth. This type of question can be asked, but from my point of view they will not ask. Correct? So one thing we have understood, that net worth we should calculate. As a net worth we should calculate before applying Ind AS ki after applying Ind AS? Before or after? Before. So as per financial statement prepared as per AS or Ind AS? AS. So that clarification has been given. Understood point now? It is understood point. So net worth should be calculated based on standalone, not consolidated. Not consolidated, standalone, because it will be applicable entity wise, not group wise. Understood? So we apply entity wise, not group wise. Standalone financial statement prepared as per existing accounting standard. Correct? Correct? Understood? Correct. Now there is some relaxation given to some companies which are listed in SME stock exchange. Do you know about SME stock exchange? SME stock exchange, small and medium enterprise stock exchange. Correct now. So there are two major stock exchange in India. One is what? Bombay Stock Exchange. One is what? National Stock Exchange. These are not SME stock exchange, but there are many other stock exchanges also. Correct now. For example, Ahmedabad Stock Exchange. Correct now. Normally what happens ki we may list our companies there also. When I say listing our companies in BSC and NSC will require higher fees. Yes, it is a very expensive method. Now I started one company, but I want to become popular. So if I will say I am a listed company, what you will think about my company? You are a big company, eh? अरे बोल रे. So I will try to list where? In some SME stock exchange. But I am a small companies na. So for them some relaxation has been given. If you are listed in SME stock exchange, then you are not supposed to apply Ind AS. However, you can apply on which basis? On voluntary basis. So some relaxation has been given to those companies which are listed where? Only in SME stock exchange. However, they can adopt on which basis? Voluntary basis. Correct? So companies whose securities are listed or in the process listing in SME stock exchange are not required to comply in AS. However, they may voluntarily adopt Ind AS. Already I have said that once we adopted voluntary, then we cannot revert back. Means it is an irrevocable option. Irrevocable option. So once a company voluntarily follow Ind AS, it is what? Irrevocable. Understood? Simple. Correct? Now, one thing that we have understood, Ind AS is not applicable, then apply what? AS, existing accounting standard. So one clarification has been given, don't worry, you need to apply what? Accounting standard. Correct? So companies not covered by the roadmap shall continue to apply the existing accounting standard. Correct? Now can you say for Ind AS we have one rules? Means Ind AS is also part of Act. Can we say like that? Ind AS is also part of Act. But can I say Companies Act or any other Act may differ than the accounting treatment given in Ind AS? It is quite possible. For example, I'll just give an example. Ind AS is silent regarding securities premium account. Ind AS says that whatever you receive from equity participant, whatever you receive from owner, that will be transferred to equity. That will be transferred to equity. Correct? Means if you receive premium, premium amount will be transferred to what? Equity. Means Ind AS is silent regarding securities premium account. Now the question is that should we open securities premium account? Are you able to understand my point? Ind AS is silent regarding premium account. Securities premium बचपन में किया ना, बैंक अकाउंट डेबिट टू इक्विटी शेयर कैपिटल टू securities premium मजा आता था. अरे बोल ना रे. You have done that only na. Now Ind AS is silent regarding securities premium account. What India says that whatever consideration you have received from equity participant will be transferred to equity account. Now the question is that should we open securities premium account or we can forget that? Why? It means law will prevail over India's. So which will prevail? Law will prevail over India's. Understood? Correct? So that is one point. Law will prevail over AS or India's. Law will prevail over AS or India's. Understood? It means can I say even though India is silent regarding securities premium account, we need to open premium account. We need to open securities premium account. Correct? But we know that Companies Act has given Schedule 3. Schedule 3 in which format has been given and some requirement has been given for the preparation and presentation of what? Financial statement, balance sheet SOPL, balance sheet and SOPL. Correct? Got it? Now the question is that whether Schedule 3 will follow or Ind AS will follow. So in Schedule 3 it is mentioned that Schedule 3 can be modified as per the requirement of what? Ind AS. Means Ind AS will prevail over the requirement of Schedule 3 of Companies Act 2013. Only Schedule 3, not Schedule 2. Only Schedule 3, not Schedule 2 or any other schedule. Companies Act will prevail over Ind AS. Only Schedule 3 format can be modified as per the requirement of Ind AS. Understood this point? So, however, AS or Ind AS will prevail over the requirement of Schedule 3 of Companies Act 2013. Means format given under Schedule 3 can be modified. Can we modify that? Yes, as per the requirement of Ind AS. Got it? Correct. Now, one point will come. There are three special points. Let us discuss one by one. First point. You suppose there is one Indian company, Indian parent company, and let us assume that Ind AS is applicable. Let us assume Ind AS is applicable because it will be covered under that roadmap. Correct? Now it has one foreign subsidiary. Foreign subsidiary. Now the question is that whether foreign subsidiary Ind AS is applicable. Means suppose that foreign subsidiary is in London, incorporated in London. So whether Ind AS will be applicable? Yes or no? Ind AS will be applicable? Yes or no? Huh? Now can I say this company's accounting standard rules will not be applicable because they will prepare their financial statement based on their act, na? Based on their country's act. Why they will follow what? Indian act. Bolo? They will follow? No. They will not follow. Means their financial statement, they will prepare financial statement based on India's, but they will prepare financial statement. Let us assume they are applying IFRS. So they will prepare as per IFRS, na? Now we can't say the financial statement prepared as per IFRS is same as the financial statement prepared as per Ind AS because there are some differences. There are some differences, na? Are you getting? Now, can I say this to become this we call it separate financial statement of parent company. We call it what? Separate financial statement of parent company. But this parent company will also prepare what? Consolidated financial statement. So can we consolidate these two financial statements? Of course no. Because one financial statement is prepared as per Ind AS, one financial statement is prepared as per IFRS. Can we consolidate? No, we cannot consolidate. So in this case, what we'll do? Huh? Bolo. In this case, this foreign company will provide what? Information to Indian parent company as per what? As per Ind AS. Only for which purpose? Consolidation purpose. Only for which purpose? Consolidation purpose. Understood? Then CFS will be prepared based on Ind AS. But can you say for reporting purpose? This is for reporting purpose, na? For reporting purpose, they are not preparing financial statement based on Ind AS. Only for consolidation purpose, they will provide information to Indian parent company based on Ind AS. but they are reporting not as per Ind AS. Have you understood? One clarification was given. This was the clarification given by the roadmap only. Indirectly, we can say Ind AS is applicable. Indirectly, we can say Ind AS is applicable. Correct? Clarification you have understood? It is a relief that an overseas subsidiary, associate, or joint venture of an Indian company is not required to prepare their financial statement as per Ind AS. They are not required to prepare financial statement as per Ind AS. However, this entity will still have to report their Ind AS adjusted number for their Indian parent company to prepare what? Consolidated Ind AS accounts. Got it? Correct. One more point. Point number 2. Suppose there is one listed company. So can I say Ind AS is applicable? Correct. And this listed company has a subsidiary, has a subsidiary which may be a banking company or insurance company. Bole yes or no? Now we have understood for banking company, insurance company, Ind AS is not applicable till date. But can this company become a subsidiary of listed company for which Ind AS is applicable? So we have understood that if Ind AS is applicable to Ind AS is also applicable to parent, subsidiaries, associate and joint venture. Now the question is that for them Ind AS will be applicable or Ind AS will not be applicable? What do you think? Not applicable. Very good. So can I say Ind AS not applicable? Very good. You have understood means. Can I say to them Ind AS will be applicable as per their time applicability? To them Ind AS will be applicable as per their time applicability. But it not applicable. Correct. It means in this case, if you see what actually happened, they are preparing SFS based on Ind AS and they are preparing their individual financial statement as per AS. Now you can see I am using two terms, separate financial statement and individual financial statement. In means practically speaking, these are interchangeable words. Means you will go to office. In office, separate financial statement and individual financial statement are interchangeably used, but they are two different names under Ind AS. Any company which is a parent company and which is preparing consolidated financial statement, their own financial statement is known as what? Separate financial statement. Means parent company prepare what? Separate financial statement. Means any company which is not a parent company, their financial statement will be known as what? Individual financial statement or commonly known as standalone financial statement. But these two are different terms. It cannot be interchanged for exam purpose. For exam purpose, you can't interchange it. Office may you can interchange, but in exam you can't interchange. Understood? So therefore, you can see for parent company, I have written a separate financial statement. Or any company which is not a parent company, for that I am used individual financial statement. Correct? So they are preparing their own individual financial statement as per AS, but now they will prepare consolidated financial statement as per Ind AS now. So in this case, what will do? So they will provide now information based on Ind AS. Means ultimately they need to provide information now. So they will provide information based on what? Based on Ind AS. For which purpose? For consolidation purpose. Understood? Got it? Have you understood this point? See, there can be one more case. One more case. Suppose there is one in parent company which is a banking company. Quite possible. Or insurance company. I'm not writing NBFC because for NBFC Ind AS is applicable. Correct. Even though there are different time applicability, but now for NBFC Ind AS are applicable. Correct. and they may have a subsidiary company which may be other than what? Other than banking or insurance company, and this is listed. Listed means India is applicable na. So they will prepare the individual financial statement based on what? They will prepare the individual financial statement based on India's. But for parent company which is a banking company, right now India's is not applicable. They will follow what? They will prepare the state separate financial statement based on AS. But they will also prepare CFS. So they will prepare CFS based on what? AS. So now they need to provide information based on what? Yes. So they will provide information based on accounting standard. Correct? I think this all you have understood. From my point of view, if they want to ask a question based on this, so they can ask these three case studies. Means if I will prepare any question paper, so I will can prepare question from this. Correct now. So this can be one question from this chapter. However, till now no question have been asked from this chapter. Correct. This is India's introduction. Understood these all points. This is only written in case study 1, case study 2. You can read now by your own, and case study 3. Correct. 1, 2, 3 we have discussed. Correct. Then last point of this chapter. Company cannot adopt IFRS as a substitution for India's. What happened? When actually India's was implemented for the first time, there were many companies which were preparing their financial statement based on existing AS and as per IFRS also. Let me take one example. Suppose there is one company X Limited. X Limited is listed in London Stock Exchange. It is also listed in Indian Stock Exchange. So as per means before 1/4/2016, means before applicability. Can I say AS was applicable? Means for the requirement listing requirement of Indian Stock Exchange, they need to prepare financial statement based on accounting standard. Correct? And as per the listing requirement of London Stock Exchange, they need to prepare their financial statement based on their act also. So let us say IFRS. So they are preparing their financial statement based on IFRS also, na? So it means before applicability, it is quite possible that even though India's was not applicable, they were preparing their financial statement based on IFRS. Correct now. Now suppose India's is applicable. After some time, India's is applicable. Quite possible. Now whether this company can say that we are already preparing our financial statement based on IFRS, so there is no need to prepare financial statement based on India's, and will continue this. Whether they can say like this? No. So IFRS cannot be substituted for India's. This point have you understood? So they can't say that we are already preparing based on IFRS and there is only 8% difference. Ignore that, na. And that financial statement will be continued. There is no need to convert AS financial statement to India's financial statement. So they cannot say like that. That is given. Company cannot adopt IFRS as a substitution for India's. Understood? I think introduction you have understood. Correct? Now, everyone. There is one more case study. But for that case study, till now no clarification has been given. If there is no clarification given, so we don't teach in class. Correct now, because it is a matter of judgment now. Matter of judgment cannot be used in exam purpose. Correct? But let us understand what is the case study. Suppose there is one parent company and it has S1 and S2. And this S1 and S2 has two more subsidiary S3, S4. Quite possible, na? And this S2 has what? S5 and S6. Now this S1 is a listed company. Correct? And there is no banking company, there is no insurance company. all are other than what banking and insurance company. Correct? Now for S1, if I say for S1 to India is applicable, बोलना yes or no? Others are not listed company, all are unlisted company. Understood? And suppose they do not reach to that limit also, or are less than what 250 crore. Correct? Correct. So S1, what is applicable? India is applicable. My question to you all, whether for P, India is applicable. For P, yes, their parent means parent, subsidiaries, associate and joint venture of that company India will be applicable. So I think no doubt. S3, yes. S4, yes. S2, S5, S6 doubt will come. If you read the rules carefully, they have written parent, subsidiaries, associate, joint venture of above. Of above means of what? S1 na. Means if you read the rules, then you will think no, not applicable. But if you try to understand the intention of rule, you will say yes, applicable. Because normally acts should be interpreted. Sometimes some word may be silent, but we need to understand the intention of rule. So till now no clarification has been given. It is a matter of judgment. Can I say even though you say not applicable as per the rules, you can fight for this, but can I say ultimately they need to provide information based on Ind AS for what purpose? Consolidation purpose, and practically therefore one suggestion is given that apply karna bhai. Correct na? Understood? But it is a matter of fact where clarification is required. Correct? So I will say it is based on judgment right now. Why sir? Why you have discussed this? Just try to this case will come with you. Because once you become CA, this type of facts will come. So I just inform you that apply it as per the judgment also. And ultimately you need to provide, this company need to provide information based on Ind AS for consolidation purpose. Better apply. So judgment, apply, better to apply what? Better to apply Ind AS. Because I have not written Ind AS is applicable. Huh? I have not written Ind AS is applicable. I have said better to apply Ind AS. This is my suggestion. Got it? With this introduction over. Correct? Any doubt about this introduction? If you have any doubt regarding practical questions, if you came across any points, then for parent company is also not applicable. That the point already we discussed now. If that is a parent company means overseas company, then Ind AS is not applicable for reporting purpose. But and then so they are not prepared to they are not supposed to prepare consolidation based on Ind AS now. Then these all companies need to provide information based on what? Whatever they are following. Whatever they are following. Correct? But that is outside our scope. We'll think about only consolidation based on Ind AS. Correct? Any more doubt? Correct. You can see now we can start Ind AS. So of course, what will be the way of my teaching? Because right now you are not familiar with my teaching style. Because you came to my classes after doing account classes from various faculties. You started your accounts actually in class 11. What you say, junior, intermediate, or whatever. But class 11 may you have done accounts, maybe with different faculty. Class 12 maybe with some different faculties. There may be some tutor also, personal tutor, which may be different. अरे बोलना रे. Then came foundation. They are different faculty. Then came CA inter accounting, different faculty. It might happen CA advanced accounting from different faculty. Then BCom first year. अरे There to we never went only. So that we should ignore. Correct. But can there are a lot of faculties you have already came across. And can all are very good teachers. I'm not saying anyone is good or not good. But can the teaching style will be totally different. Every faculties have a different teaching style. With accounts, one difficulty is what? That I am coming to the end. And normally we love who come first in our life. Correct na? We love the person most who comes first in our life. First love is always first love. Correct na? Are you getting? So in your life already there are many accounts faculty na, and I am coming at the end. अरे बोलना रे. Therefore, first I need to acquaint you all with my teaching style. Therefore, what I will do, I will teach those Indias in which you are familiar, which you have done where in CA Inter, and the difference will be only 5% difference. For example, I will start with India's 37. India's 37 is nothing but AS 29. It is 95% same. AS 29, बोलो ना, provision, contingent liabilities and contingent. This that provision, contingent liability, contingent asset, and I said only what? 5% difference. अरे बोलना रे. तो if I teach you only 5% difference, मजा आ जाएगा. अरे बोलना रे. Correct? अरे बोलना रे. But I will not do that. I will assume that you don't know anything, and I will teach from base, irrespective of whether you know or whether you don't know. Correct? Got it? Before I start, because legally 5 minutes, 7 minutes left, 7 minutes is left. So I have 7 minutes with me. Correct? Legally, contractually. Whatever I will do as per contract. So I would like to ask three questions to understand whether you know AS29 or you don't know AS29. And can I say I need to inform you also what you know, what you don't know? Correct now. First, what is the meaning of provision? First question. Second question, what is the difference between provision and contingent liabilities? Second question. Third question, whether provision for doubtful debt is a provision or contingent liability. Three questions I have asked. Have you understood all the three questions? Right now you need to answer. Huh? Okay. First question, what is provision? Anyone who is raising hand, I will ask to them. If you are not raising hand, means you are not willing to answer. Okay? Don't say, oh, correct now. As raise your hand, then I will say you can answer. What is provision? Means provisions are certain. Means contingent liability is not at all certain. Okay? So you are saying both the same हो गया ना? You are only confused. Stick to one point ना. Certain, uncertain. देखो, 1 second, I am not asking to demotivate you all. I am asking to inform you what you have done in CA Inter and what is required to be done in CA Final. Understood? Then only interest आएगा. Are you getting? You want to continue? I will proceed. Anyone there? Only I will stand in the class. You have right to sit. रुक जा. Because you have used some technical terms. You have used present obligation. So I need to ask something more ना. देखो something. We have done some memorization of what? Definition. But whether we know the definition, that also we need to clear ना. What is the meaning of present obligation? 1 minute. Let we should be satisfied that yes, he has given the answer. Because it will take some time to process ना. CA inter exam written after मजा आ गया. Then suddenly I am asking some question. It will take some time to process. Means one thing is clear that when you have done the definition, You have not understood present obligation. Otherwise, you would have explained in your own simple words. Am I right or not? Am I right? No, you define provision. Obligation existing on balance sheet, that means what? Means you are seeing contingent liability में whatever obligation that is not existing on balance sheet date. In provision, probability is less than contingent liability. Means I am getting थोड़ा सा 70% perfection answer. Okay, because 100% I have not said, huh? 70% perfection answer I got, and 70% means you can score rank. Understood? Means ICI don't want 90%, 95% from you. Passing marks is what? 50%? Only they want 50%, you will become CA. Means the target, means as per ICI the limit is 50%. They have never demanded 99% from you all. You remember the class 12 exam, your parent used to say 90. Bolna yes or no? Not less than that. Bolna yes or no? Your teacher says 90. Bolna yes or no? Here ICI saying only 50. Which is easier exam? Simple. I'm saying of facts na. बोलना है only 50% ना. 50% means what? 50% you should know. If you know 50%, you are CA or not? You are chartered accountant or not? If you have written 50% correctly, you become CA or not? And after studying, can't you write 50%? बोलो yes or no? So which is easier exam? CA is easy or tough? Unnecessary we are making it tough. Unnecessary. Because others have not passed. We will also not pass. Why we will not pass, Baba? He will die, so I will also die. Simple speaking, na. Normally what happens, we go where always the negative peoples are there. Why you are asking them? Why you are taking suggestion from them? They have done blunder mistakes in their life and you are taking suggestion from them. You should not take as you should not, I will say, discuss anything from them. I'm not saying don't respect them. Respect na, love them. I'm not saying ignore them. But taking suggestion from them is wasting your time, wastage of time. This normally happens in CA. We fail not because of our preparation, we fail because of surroundings. Fail because of surroundings. Understood? We see that he's taken 10 attempt. 10th attempt. You are studying for 24 hours, but you failed 10 attempt. I will also not pass. Why you will not pass? What he has done in 24 hours, that you ask, na? Whether he has studied or he was doing surfing, internet surfing, Google Baba. That we don't know, na? 70% your answer is correct, believe me. 70%, and you, if you can write this much, you have a potential to score rank. I'm not saying only to him, to everyone. Because if you see the marks of rank 1 to rank 50, they have scored what? I will say less than 70%, then also they have scored rank. 50th rank marks lego, it will be around 67-68% aggregate. Understood what I'm saying? Means 50% we are targeting thoda sa effort. Just push yourself 50% is come to 60, and from 60 to 65 and then 70. 70% you score rank. Rank is not difficult. Rank is not difficult in CA. So why you have not got rank? Dekho, at that time no one was there to guide me. There was no guidance I have received. No one was there to guide. I have not taken any single coaching class. So no guidance. I was trying for what? Rank. But I have not got that. Chalo theek hai. But I was trying for rank only. Something, some hota hai. It was my bad part. But I passed here na. That was good part. So what I am saying, you have all potential to score rank. Think about that. I will not say 100% correct, but provision whatever you have said that is correct, and contingent liability also whatever you have said that is correct. Means difference, so you have already said that yes, in that The probability of happening or non happening is what? More as compared to contingent liability. But 100% satisfaction nahi hoga. Correct? Last question. Then all thing we'll discuss tomorrow. Why? Sorry. Acha, before that, one more clarification I want from you all. Whether provision is a liability? Yes, provisions are liability. No doubt about that. Provisions are liability. Now, provision for doubtful debt is a provision or it is a contingent liability? I'm coming to you only. Don't worry. Anyone? Anyone? I have asked one question. Provision for doubtful debt is a liability. मेरे को घुमाओ मत. Is not a liability. Is not a liability. Huh? You said it is not a liability. So whether it is a provision, it is not a. It is a provision. It is not a provision. 100% correct. 100% correct. This is 100% correct, huh? Not 70% correct. It is 100% correct, and believe me, for the first time I got this answer in class. For the first time I have taken so many batches. I have also forgotten the count now. For the first time I got correct answer in the first answer only. 100% correct, huh? More than rank you can get. Correct. It means when we try, when we speak, something will come out from us. We need to answer. Means in exam we have two options. In every exam we'll have to see exam, huh? We have two options, do or do. Do or do. Either do correctly or do whatever you know. But do it. 90% time if you attempt now, your answer will be correct. But we don't attempt only. Because of what? Exam phobia. Because of exam phobia. What will happen if you write wrong answer? Try to attempt. Even you don't know, attempt it. 1 marks difference will be 6 month gap. 199 in CA is fail and 200 is pass. But actually there is no difference between that two students. It might happen the student 199 was more deserving, but 1 marks less, so 6 month baad aana. That you need to understand the importance of 1 marks. Importance of 1 marks. For today, this much only. Thank you very much. We'll meet tomorrow. Once again, till then, bye bye. Take care. Enjoy your remaining day. We'll continue in days 37. Means we have not started only in days 37 tomorrow. Bye bye. Take care. Time will be up to 9:45. 9:45. Okay. Correct. We can discuss one.